In this video, you're going to learn every single thing you've ever needed to know about life insurance. We're going to cover what it is, what it isn't, what kinds of life insurance there are, and what kinds you should be looking for, what kinds you should be actively avoiding. Who needs life insurance? Who doesn't need life insurance? Once you know you need life insurance, how much life insurance do you need, and how long do you need it for? We're also going to cover red flags you should avoid, scams that are out there, and so much more. And if you don't know who I am, my name is Joe Brown. In 2019, I quit my job as a stockbroker. Now I run Heresy Financial University, where I teach people how markets work so you can make more money investing. And a misunderstanding of life insurance is one of the costliest mistakes anybody can make in terms of their financial obligations and liabilities. Because if you don't do it right, best case scenario, you're going to be spending a lot of money on something that you will never get back. Worst case scenario, your dependents are going to be left with nothing if you end up dying. So first, let's start off with looking at the true purpose of life insurance and what it is not, because everybody out there who's trying to sell you life insurance is probably going to try and sell you the wrong kind of life insurance. So number one, life insurance is not a permanent income replacement. So if you ever have an insurance salesman try and come up to you and say, hey, you want to provide permanent income replacement to your dependents or anybody who survives you, run, don't walk, because they're trying to sell you something that's going to put a big fat commission check in their pocket. Number two, life insurance is not there so that those who survive you can get rich. You're going to see this theme pop up a little bit later, but investing is how you create wealth, not insurance. And so if something's being pitched to you because your survivors, your dependents are going to get rich, run, don't walk. Number three, life insurance is not there so that your survivors can pay off your house. This is another one that I hear a lot. Somebody says, oh, if I die, I want my spouse or my kids to be able to pay off the house so they don't have to worry about it. That is missing the mark. 9 times out of 10, they're not going to want to live there anyway, but it's missing the entire purpose of what life insurance is for. Number four, life insurance is not there to be a bank for you. I'm sure you've heard of things like the infinite banking concept, using whole life policies. Insurance is not there for banking. And if you try and use it for that, it's going to cost you dearly. Number five, life insurance is not there to be an instrument for wealth creation. That is the realm of investing. There's different financial products here. There's investing, there's insurance, there's banking, there's all sorts of different financial products, but insurance is not supposed to be mixed with investing. Investing is what you do in order to create wealth. Which brings us to the true purpose of what life insurance is supposed to be used for, and that is something extremely specific. It is to protect against the risk of your dependents needing income until they can provide it for themselves. That's it. Any insurance product that doesn't do that or promises to do more than that is a scam, and you should run away. Let me say it again. Life insurance is there to provide income for your dependents in case you pass, the risk of you passing, just for the amount of time that they need that income until they can provide that income for themselves. And if you stick to an insurance product that does that alone, nothing more, and most importantly, nothing less, then you will, number one, pay the least amount, you'll lose the least amount possible, and you'll have the most amount of risk protection for the thing that actually needs protecting. And don't worry if you're not sold on that yet, we're gonna cover some of those details why that is true. And the first reason why is that all insurance, life insurance included, is actually technically a scam. Now, just because it's all a scam doesn't mean there aren't insurance products that you don't need. Let me explain. You will lose money on insurance. And here's how we know. Insurance companies stay in business forever. Rarely does an insurance company go bankrupt. They do this by making sure that they charge enough on each policy so that they never have to pay out more than what they've brought in income. Therefore, on net, across the board, the insurance company is making money and the people paying for the policies are losing money. Now, does this mean that every single individual person who has any sort of insurance is going to be a net loser in the long run? Absolutely not. There's going to be some winners and some losers. But on net, when you aggregate all the people who own all insurance policies of all kinds and the insurance companies who are selling them, the insurance companies are going to be the winner. Otherwise, they wouldn't still be in business. They couldn't have a profit. But That doesn't mean that it's not a good deal if you get the right kind of insurance to protect against the right kind of risk, because that's all insurance is for. Every type of insurance is to protect yourself from a very specific type of risk. Take, for example, auto insurance. That is to provide protection against the very specific risk of you owing money to replace a car, fix property, pay medical bills for somebody in the case of an accident that's your fault. Now, most financial calculators and people who run simulations to determine whether you should invest in something or buy something, if they ran the numbers on insurance, they would look at an auto insurance policy and they would say, hey, we ran this through a simulation and we played out your lifetime 10 million times. And in 85% of your lifetimes, you paid car insurance for your entire life. And so you spent hundreds of thousands of dollars on car insurance, and you never made back the money from that, number one. And number two, you never even got into an accident that came close to those hundreds of thousands of dollars in costs. Therefore, by the simulations, by the financial calculators, they would say you shouldn't have insurance on your car because the odds are that you won't actually have to use it and you'll be better off financially by not using it. But here's the problem, and here's why very specific types of insurance are actually still a good deal for you, even though you're going to lose money on net in the long run, most likely. The reason is because we can't play our life over again 10 million times. We only get one go around at this. So it's to protect ourselves from a very specific type of risk that if something happens, it doesn't wipe us out. Because if we get wiped out, that's the end. There's no coming back from that. You have to pay $2 million in medical bills and property damage because you accidentally got into an accident. That wipes you out. Most people could never, ever, ever recover from that. However, if you spend $100 a month on car insurance, yes, most lifetimes played through, that's going to be money lost. But in the off chance that you get into a situation where you were going to have to pay $2 million and now it protects you from that, that's a good deal. I'd rather have a guaranteed loss of $100 a month than the chance that if I roll the dice the wrong way, that I'm out $2 million. And so yes, while most life insurance is technically a scam, meaning you're going to pay for it forever and it's never going to actually come into use for you, you're never actually going to have to use it, it's still a good idea for very specific types of risks because it takes away the downside of something that could actually destroy you. Now, if you're running through your mind and you're thinking about the different types of insurances that you have and you're thinking, well, my insurance doesn't fit that bill, then maybe you shouldn't have that type of insurance. And life insurance is a great example of this because there's tons of different types of life insurance out there. Whole life, universal life, there's term life, there's all sorts of different life insurance products. So a lot of people just get overwhelmed and they're like, I don't even know. Like this, there's so many options out there. Everybody's trying to sell me something. I'm not even sure where to begin. So I'm not even going to look at it. I'm just going to hope that everything's okay. So now let's look at who it is that actually needs life insurance, because it's very possible you're watching this thinking, man, I should get some life insurance, but you don't actually need any. And here's why. There's only one very specific type of person who needs life insurance at all, and it is the person who has dependents. If you don't have dependents, you should not have life insurance. Now, I guess the caveat to that would be if you know you're about to have dependents. Let's say you and your spouse are trying for kids or you're expecting, you're in a situation where you know you are going to have dependents soon, then yeah, it might make sense to get some life insurance ahead of time. But that's the only type of person who needs life insurance, is somebody with dependents. Now, I need to make it clear, dependent doesn't just mean a kid. Most of the time it means kids, but dependents can be anything. I mean, if you have a disabled spouse or a family member who's going to need your care and your income for the rest of their life, it's like, those are dependents still, and that counts. A dependent is somebody who depends on you for their income. That's why it's called a dependent. If they're not dependent on you for income, they're not a dependent. Your 17-year-old kid, probably not really a dependent in your own eyes because they can work and they can afford cheap rent with a roommate if something were to happen to you. So from a life insurance perspective, you might look at that kid and think, no, they're not actually dependent. Even if they are from a tax perspective, this is different. However, somebody with physical or mental disabilities that is much older, and maybe they do have the ability to earn a little bit of income, but they're actually dependent on you. If something happened to your income, you're not actually sure what would happen to them. Their lives could be destroyed. That's a dependent. They're dependent on you. And so that's the only type of person, if you don't fit into that box, you have dependents, then you don't need life insurance. And here's why. The point of the life insurance is to mitigate the risk of your income disappearing for the person who depends on you for their income. So let's say your kids are out of the house, you're married, you don't need life insurance because yes, right now your spouse does maybe technically depend on you for most or some of the income for the household. But here's the hard truth, it's actually gonna work out better mathematically and with the amount of wealth you're gonna be able to produce, and you'll see why towards the end. If that's you, you don't need life insurance because if you were to die, your spouse would be able to make up the difference and work to produce their own income. Unless they're a dependent, which we already covered that, but if it's just a regular person who has regular abilities and can get a job, then they are not dependent on you for income. Now, if you're thinking, well, we've got this house, we've got this mortgage, we're getting older, I don't want them to have to worry about this. Don't worry, we're gonna cover that. Remember, life insurance is technically a scam. Any dollar that you pay into life insurance, you're never gonna get that back. You're never gonna see it. It's going to be a net drain on your wealth, not a net addition. So there's something else you're gonna do with that money instead, but we're gonna come back to that in a minute. All insurance, but specifically life insurance, is about risk mitigation. That is it. So if you have no dependents, you have no risk. There is nobody's life who's going to be destroyed if you no longer have that income to provide, if you're no longer in the picture. Okay, so next, the question is, all right, Joe, if you're saying that I don't need life insurance, well, what happens if I die and the house isn't paid off and then my spouse, my wife, my husband has to go back to work and be a Walmart greeter? What about all of these examples? Their life would be so much harder if I was not in the picture. And that is probably true. But here's the thing. You are going to pay a specific amount for that life insurance dependent on your risk of dying. That's how life insurance or all insurance companies stay in business. They make sure they charge enough to compensate themselves for that risk, which means more than likely you're not going to die during the period of time that you have that life insurance for. So statistically, what is better to do, because there's no risk, remember, you don't have a dependent. So you don't need to cover that risk. What you need to do with those extra dollars is invest them. If your kids are already grown, they're out of the house, you're in your 50s, you're in your 60s, you're gonna be paying an exorbitant amount of money for life insurance because your odds of dying are way higher because you're old. So you don't need the life insurance. You're gonna take that $100, $200, $300, $400, $500 a month, and you're going to just invest that instead. Why? Because then it's your money. You keep it. It's all your wealth. Put that in an index fund. As much as I dislike index funds and passive investing, they're a million times better than just giving it to an insurance company and they're never going to give it back to you. Guess what? After a couple of years of putting the amount of money you were going to pay for an insurance policy into your own investment, your own wealth creation, you're going to be keeping all that wealth. It's going to be growing for you. Guess what? Within 10 years, 15 years, you're not going to have to worry about paying the house off anymore. You're going to have a nice little extra nest egg on top of what you already had. And this is the way that you are going to somewhat self-insure because you are keeping that money yourself, you are investing it, even if you want to put it in a separate account and say, hey, this is the account where we will use this for the expenses in the case of one of us passing, whether it's to pay off the house early, whether it's to provide some additional income in excess of Social Security, pension, retirement funds, all of that. It's up to you, but you are self-insuring at this point because you actually get to keep the money instead of just sending it to somebody else who's charging you extra, never going to give it back because they need to compensate themselves for that risk of you dying because they need to stay in business. Just do it yourself and keep the wealth yourself. And do not do it through an insurance policy like a whole life, universal life, something like that. And I'll show you why in a minute. But first the question is, all right, well, I'm employed and I have life insurance through my job. Is that enough or is that not enough? Well, the first thing that we have to look at is insurance through your company versus third-party insurance. And then we can take a look at the dollar amount. Let's just first take a look at insurance through your company that you work for versus third-party insurance. Most employers have great deals with life insurance companies where you can get a term life insurance policy through the insurance company that is attached to your employer, and you can pay a great rate and get a great term life insurance policy through them. Here's why I don't recommend using that for the only life insurance. You are much more likely to leave your job during the time period in which you have dependents than you are to stay with that job. On average, people change jobs once every 6 to 7 years. And that's across America, across age groups. And actually, the younger you are, the more frequent you're going to be changing jobs statistically. And the younger you are, you're Gen X, you're millennials, you're Gen Z, you're gonna be having kids during that time, which means that's when you have the dependents. And here's the deal. Every single time you change employers, you're gonna have to sign up for a new life insurance policy through the insurance company through your new employer. And guess what? You're older now. Maybe you gained some weight. You're putting on those average 4 or 5 pounds a year like the average American. Your health markers are not as good. You're not gonna be able to get as great of a policy every single time you switch jobs. And so if the only insurance policy you have is the one through your job, at first, when you're young, you're 25, you just had your first kid, you're signing up for your term life policy, you might get a great rate. But 6 years later, 7 years later, you're in a new job, you have to sign up again. Now you're older, you're a little bit heavier, you're a little bit unhealthier. Maybe you have another kid, so you've got to sign up again. Or maybe you have to just increase the rate. Well, guess what? You're going to be paying more. So in the beginning, if that's the only thing you lean on, it might be the cheapest option for you. You've shopped some third parties and you're like, man, it's gonna be way cheaper through my employer than it will be through a third party. But by the third or fourth time, 10 years from now, 15 years from now, guess what? It's gonna be much cheaper if you would have just stuck with a third party from the very beginning. So third party term life insurance is going to cost you more now, most likely, but it'll cost you less in the long run. Now, if you're thinking, man, if I change jobs, 3 times throughout the life of my dependents, like that raises the question, how long do I actually need life insurance for? Because we know that it's just to replace your income so that your dependents can survive on you because they're dependent for your income while you have dependents. And so it's a very easy calculation. Just look at when your youngest dependent will turn 18. That's it. So if you've got a 3-year-old and an 8-year-old, then you need a term life insurance policy that lasts for the term of 15 years when your 3-year-old turns 18. If you want to be a little bit more conservative, maybe wait till they're 21 or 22, but that's really not necessary. Again, this is for your income replacement while you have dependents. And the extra money that will cost for that term life insurance policy that lasts that extra 4 years, you can take that and you can invest it instead, because in all likelihood, you're not actually going to die. That's why the insurance company is insuring you. Take that extra money, you invest it instead. Now you have some actual money left over instead of just paying for a policy. Now this raises the question, well, we're planning on having multiple kids. What happens if I have a 15-year policy for my 3-year-old and then in 5 years, then we have another kid? Well, the answer is you get another policy at that time that will be 18 years from there for the exact amount that you will need then. Remember, this is for income replacement. And so if you have multiple dependents, you need more income for those multiple dependents. But every time you have a new kid, let's say your new kid is, brand new newborn, 0 years old, so you need an 18-year policy for them, but your next kid is like 5 years old. Well, that's a 5-year difference that you don't need overlapping policies for. Because for the last 5 years of that new child's life until they turn 18, they're the only dependent that needs to be protected. Everybody else is already older, no longer a dependent. And here's another red flag, another scam to watch out for. There are plenty of insurance companies that are going to try and sell you all sorts of different types of life insurance policies that are trying to mix income, wealth creation, banking with insurance. The reason they're trying to sell these to you is because they make a fat commission. Huge amounts of money in this business. You're paying out the butt for these policies that offer very little protection, very little wealth creation. They're a Frankenstein mixture of two things that should not be going together. They're going to result in worse outcomes for you. And all of that extra money that you are paying to get this terrible product goes into the pocket of the salesman that's trying to sell it to you. They're terrible products. Stay away. But guess what? There's also a scam with term life insurance, because there are some companies out there that will try and say, hey, we don't sell any of those bad products. The only thing we sell is the stuff Dave Ramsey recommends, just term life insurance policies, because those are super cheap. We want to make sure you get your good term life insurance policy. And guess what? They're going to say nobody else sells these term life policies for as long of terms as we do. Everybody else will be capped at 15 or 20 years. You're going to have to pay way more. We offer 30, 35-year policies. We're going to give these to everybody because everybody needs great life insurance. Well, guess what? No, they don't. You only need it if you have dependents. How many people out there are going to have dependents for the next 35 years? Almost nobody. So if you are in a position where you know you have a dependent that will be a dependent forever, then certainly a life insurance product like that is going to be good for you. But if you are a more typical family where your dependents will no longer be dependents in the next 10, 15, 20 years, you don't need a 30-year policy. You're paying too much for that because they have to count for the fact that in that last 10 years, you're much more likely to die than you are right now. And so it's going to cost you a lot more per month for that longer policy. So every other life insurance product out there outside of term life is a scam. And even with term life, you want to make sure that you're only getting it for the term, the period of time that you will actually have dependents for. Now, a side note here, there is a possibility, and I'm still doing research on this, so I just need to make this note because I'm probably going to get a ton of comments on this video from this. There's a possibility that a whole life insurance policy that is crafted in the right way might be a good tool for asset protection against lawsuits, maybe some asset protection for taxes, because you can borrow against it and use that as like your own internal bank for internal banking. It's called the infinite banking policy or infinite banking concept. But the problem is you can do that with other vehicles. Like you can do infinite banking with like a brokerage account or even a regular bank account. You don't need a whole life insurance policy to do this. And I've done a little bit of digging. It's pretty complicated, and I haven't yet seen compelling evidence that using a whole life policy that way is going to result in better outcomes for you than just keeping everything separate. I'm going to keep my life insurance as termed, which is the cheapest way to do it, completely separate, and I'm going to keep my investing separate. I'm going to keep my banking separate. So far from what I've seen, there's not a compelling case to be made for that when you really dig down and look at the numbers. I know some people that really like it and are heavily involved in it, so I'm not prepared to say that always 100% of the time whole life is a scam, but I still definitely lean that way. And so just as a rule of thumb, until you're at the level where you need to really be worried about, hey, somebody might sue me for, millions of dollars. I have this massive nest egg that I need to protect. I'm looking for ways that I can get cheaper interest for, funding these projects through I can borrow against myself. Like a very specific set of needs. You can go down that rabbit hole yourself. There might be a solution for you. But for 99.99% of people out there, keep it separate. Term life only, just for when you have dependents. Every other life insurance policy, run away from. Don't even walk. All right, so how much life insurance should you get? We know how long it should be for. We know who should get it, who should not. So the question now is, all right, I know I need life insurance because I've got some kids at home still that are still young. I know that I should get term life insurance and nothing else. And I know when the term should expire. Let's say it's in 15 years. But how much life insurance do I need? And the rule of thumb here is 10x your income. Because remember what the point of this life insurance is for. This is to replace your income if you die while you still have dependents. So if your salary is $100,000, then you need $1 million in your term life policy. Why? Because what your dependents will do is, or the executor of your estate or whoever is, your guardians of your children, they're going to take that money, they're going to put that in the stock market, and they're going to take 10% of it out every single year. Now, there will be bad years, there will be good years in the stock market, 100% true. But you don't need this to last forever. This is only there to give them income for the time that they need it until they're able to provide income for themselves. So if you get 10x the amount of your income, have it invested once you die, and they take 10% of that out, it will last far longer than the amount of time that they need it to. In fact, if they've got about 10 years left and they don't even need to invest it then. They just take 10% or 10% of it every year. And then at the end of those 10 years, then it's going to be drained. But they don't need it after that because now they can work. And that's why you want to invest it, because if there's 15 or 20 years for that time period that they're going to need it, well, then you want to have it invested so that there's some growth. So if they're taking from it, they're primarily going to be taking the growth from it, especially during those growth years. If the stock market's up 10 or 20%, they only take 10% of it out. That's good because that grows the account. And then on those years where the stock market's down, then they still have to take 10% of it out for their living expenses. Well, guess what? Yeah, the account's going to probably drain a little bit over time, but it'll last far longer than they need it to. And maybe they'll even have some left over once they're no longer dependent and they're providing for their own income. They might have a little bit left over. Now, here's a little bit of a hard talk here. Let's say your salary, especially between you and your spouse, let's say you guys high income earners, you're pulling in $400,000, $500,000 a year, and you're thinking, man, should I get $5 million for a life insurance policy? And the answer is, well, you could probably afford it. That's not really going to be an issue. Number one, unless you're, very elderly, you had kids really late. Number two, then your kids would be able to maintain their current lifestyle if you guys were both to pass, because they would have, let's say, $5 million to invest, and they'd be able to pretty much match their current lifestyle. Most likely though, and why I probably wouldn't recommend it, like it doesn't scale up forever if you're making $1 million, $2 million, $3 million a year. Why this term life thing doesn't scale up to always doing 10x your income while you have dependents is because number one, let's say you pass and your income goes away, your kids actually don't need that much income to survive, right? There's a much smaller amount of income that's actually necessary to survive. So having $1 or $2 million of a life insurance policy is plenty sufficient for any kid to be able to have a normal life, even a great life. To have that produce enough income, it produces the $100,000, $150,000, $200,000 per year until they're able to work for themselves. So if you are getting a policy that's 5, 6, 7 million, you're over insuring. You're paying more for more than what you need. But the second thing is, again, you're statistically probably not going to die, which means you could take that extra $400, $500, $1,000 per month that you're spending on this insurance. You could shrink your policy down to a regular amount, like 1 or 2 million, take all that extra money you were going to spend and invest that instead. And very quickly, you're probably going to have enough to where you can self-insure, that if you pass away, you don't need the life insurance company to step in and write a check. You've just got the money that your kids are going to be able to have anyway. And that money that you've already built, that wealth you've already created, will be enough to provide for their needs. Again, remember what life insurance is for. It's for the risk that your dependents will not have the income. But if you are making a couple $100,000 a year, and by the time they're 5 or 10 years old, you've already been able to create a couple $1 million in wealth, especially if it's liquid, that's going to be able to be the life insurance policy for them to provide the income that they need. You don't need the external policies. Essentially, you just need to make sure that your kids have the income that they need until they can work. All right, so now let's get into how to actually go about finding a good term life insurance company. First, a quick recap. Number one, who needs life insurance? Only people who have dependents. Number two, how long do you need life insurance for? Only while you're going to have dependents. Number three, how much life insurance should you get? As a rule of thumb, 10x your income. It doesn't scale up forever though. You just want to make sure that the amount of money at your death will be able to provide enough income for your kids while they're that dependent age until they can provide their income for themselves. Next, what types of life insurance should you get? Ignore and run away from all the red flags. Anybody trying to sell you anything that is other than term life insurance or term life for longer than you're going to have dependents. And finally, where can you go to find some good, cheap term life insurance that will actually pay out what they promised and not be a big ordeal, just a quality company? There are a couple very easy things you can do to find these companies. Number one, go to Google and type in insurance broker near me. You're going to find at least 10 phone numbers of insurance brokers who are near you. You call the first one and you say, hey, this is my situation. I would like a term life policy that will expire in 15 years. And they will say, okay, fill out this form, give me all this information, and I'm going to send you 12 different options. And they're all going to have different payments. They're all going to be different prices. You can read through the details of them, but we're going to send you a bunch of options and I'll tell you which one I recommend. And you're not just going to do that with one broker. You're going to call 5 brokers, and you're going to get the 10 options from each one of these 5, 6, 7 different brokers. And guess what? You're probably going to see the same exact companies pop up, and you're going to have 3 or 4 options that are all really cheap. They're going to cost you, $50, $100, $200 a month. And they're going to say, hey, if you die anytime between now and the next 15 years, for any reason, we're going to pay you out the $1 million or the $2 million for your policy. Simple, straightforward, cheap, effective. Risk mitigation done. But let's say you're not in an area, let's say you're really rural, really remote, let's say you just don't like Google. Another option, you can call Xander Life Insurance. They're a very good insurance company. Great people. This is, if you recognize the name, this is the company Dave Ramsey always recommends. They're an insurance broker. They don't do their own insurance. So you call them, you do the same thing with them, and they send you a bunch of different options. They're going to send you like Lincoln and National and Prudential and a bunch of different options and saying, hey, here are your choices for term life insurance. Let's say you don't like Dave Ramsey, don't like Xander, don't like any of that. You just want something simple, quick, and easy, and you don't care if you pay a little bit extra for it. Really, 2 good options are Ladder Life and Lemonade. Ladderlife.com, they're pretty much just completely online, very easy process. You go and you fill out a couple of things and they're going to give you a quote. You can just pay with a card. Very easy to get your insurance through Ladderlife. Same thing with Lemonade. It's all online. You click the button. If they need to, they'll do a home check. They'll send out a nurse to you and they'll go draw your blood and weigh you and all that. And they'll schedule it to come into your home and do that for you, or at your place of work, wherever you want to meet. Or you can go into somewhere and get tested by you going in somewhere else. But they're very, very easy to deal with. These are online companies. And because of that, because they're like pretty easy to get approved for, usually they're going to be a little bit more expensive than some of the older traditional companies that are just harder to deal with. You have to use physical paper and harder to get a hold of. So these two online companies, Ladderlife and Lemonade, I really like them. They're very easy to deal with. They just tend to be a little bit more on the pricier side. I do have an affiliate link for Lemonade in the description below. So if you want, I think that might be a discount, might not be. You can check that out if you'd like. But any of these options that I've covered are absolutely great options for you. You can just call an insurance broker and say, hey, I need to find the best term life policy. Here's my details. I want it for the next 15 years. This is how much I need covered, 1 million policy, 2 million policy, whatever. And you're gonna be able to find something really great. And if you would like me to help you with applying more of these tactics and tips and strategies, these financial concepts to your life, that's what Heresy Financial University is for. We talk mostly about investing and wealth creation there. If you're interested, sign up below with the link in the description. Thanks so much for watching. Have a great day.